Here's a question that sounds like it should have a simple answer. Am I French tax resident? I live in France. Surely that's obvious. Well, not necessarily. I've met people who've lived in France for 3 years and are still not entirely sure of their status. And I've met people who've moved back to the UK and didn't realise they were still considered French tax resident for another year. Tax residency is one of those things that seems straightforward until you look at it properly, at which point it becomes considerably less straightforward. So let's look at it properly. Welcome back to the Expat Accountant. I'm Ad, a UK qualified accountant and British expat living in France. Last week we covered the big picture of UK tax when living in France. If you haven't watched that yet, I'd suggest starting there as it gives useful context. The link's in the description. Today we're going deeper on French tax residency specifically. What makes you a French tax resident, how to know for certain, and what it actually means for you financially. Quick disclaimer as always, this is general information, not personal advice. Right, let's go. French tax residency is determined by Article 4B of the French General Tax Code, which sounds terribly grand, but is actually quite logical once you break it down. France uses 4 tests and you only need to meet one of them to be considered French tax resident. Test 1. Your home is in France. France looks at where your principal residence is. Not a holiday home, not somewhere you stay occasionally, your main home. If your family lives in France, if your permanent address is in France, if France is where you return to after travelling, that's your home for tax purposes. This is the test that catches most British expats. You moved to France, your home is in France, you're a French tax resident. Relatively straightforward. Test 2. Your principal place of abode. Even if you don't have a permanent home in France, if you spend more time in France than anywhere else, France may consider you resident. This is where the 183-day rule comes in, the one everyone's heard of. Spend more than 183 days in France in a calendar year and France considers you resident under this test. Note that France uses the calendar year, January to December, not the UK tax year of April to April. An important difference that catches people out. Test 3. Your professional activity is in France. If your main job or business activity takes place in France, you're French tax resident under this test. Even if you work remotely for a UK employer, if you're physically working in France, France considers your professional activity to be here. This is increasingly relevant in the post-pandemic world of remote working, something I'll cover in a dedicated video soon. Test 4. Your centre of economic interest is in France. This is the broadest test and the one that causes the most debate. It essentially asks, where are your main financial interests? Where are your investments, your business interests? Where does most of your income come from or get managed from? If the answer is France, you're resident under this test, even if you spend significant time elsewhere. Now, most people watching this will clearly meet one or more of those tests. You live in France, your home is here, job done. But there are situations where it gets genuinely complicated, and these are worth knowing about. The part-year mover. If you move to France partway through the year, you may be tax resident in both the UK and France for parts of the same calendar year. France will consider you resident from the date you establish your home here. The UK will consider you non-resident from a date determined by the statutory residence test. These dates don't always align neatly, which can create a complicated overlap period. In the year of your move, getting proper advice is particularly important. The frequent traveller. If your work or lifestyle means you split time significantly between the UK and France, perhaps you have business interests in both countries or you're still winding down UK commitments, working out your residency position requires careful day counting and documentation. Keep a diary of where you are. Seriously. A simple note on your phone each day noting your location can save enormous headaches later if your residency is ever questioned. The retired couple with property in both countries. It's very common amongst British expats. You have a home in France and still own property in the UK, perhaps renting it out. You might spend summers in France and Christmas in the UK. In most cases, you'll clearly be French resident, but the UK property and visits can create UK residency ties that complicate the picture. The key is documenting that France is genuinely your main home. The one that really surprises people, leaving France. If you decide that France isn't for you and you move back to the UK, firstly, I won't judge you. The weather here can be trying in February. You need to formally establish your exit from the French tax system. You don't automatically stop being French tax resident just because you've left. You need to update your address with the French tax authority and file a final French tax return for the year of departure. Failing to do this can result in France continuing to consider you resident and expecting tax returns, and eventually penalties for years after you've gone. Here's something that surprises a lot of people. It is entirely possible to be tax resident in both the UK and France simultaneously. Both countries have their own rules and both can independently conclude that you're resident under their respective tests. When this happens, and it does happen, the UK-France double tax treaty has a tiebreaker mechanism. It works through a series of questions in order. First, where is your permanent home? If you have a home in only one country, that country wins. If you have homes in both, where your personal and economic relations are closer. In other words, where is your centre of life? If that's still unclear, where do you habitually reside? Essentially, where do you spend more time? And if still unclear, what is your nationality? And if you're somehow still tied, the two tax authorities negotiate between themselves, which, given the historical relationship between the UK and France, is presumably conducted with great diplomatic warmth. In practice, for most British expats who have genuinely moved their life to France, the tiebreaker will point clearly to France. But knowing the mechanism exists and that it can protect you from being fully taxed in both countries is useful. So, you've established you're a French tax resident. What does that actually mean day to day? It means you must file a French tax return, the Déclaration des Revenus, every year, declaring your worldwide income. The French tax year is the calendar year, and returns are typically filed online between April and June for the previous year's income. The exact deadline depends on which department you live in. France divides the country into zones for filing purposes, which is very organised of them. It means France will apply its own tax rates to your income after applying any credits from the double tax treaty. French income tax rates start off at 0 and then move through bands of 11%, 30%, 41% and up to 45% for the highest earners. There are also social charges, prélèvements sociaux, on top of income tax, which can add a further 7.5% to 17.2% depending on your situation and health coverage. These social charges are one of the less pleasant surprises for British expats and definitely worth a dedicated video which is coming. It also means France will expect you to declare foreign bank accounts. If you have UK bank accounts, and you almost certainly do, France requires you to declare them on your tax return. Failing to declare foreign accounts can result in significant penalties. It's one of those things that feels unnecessary, but is legally required. And it also means you become part of the French social security and healthcare system, the famous Sécurité sociale, which is actually rather wonderful once you're in it, and considerably more comprehensive than what most of us were used to in the UK. Right, so how do you actually confirm your French tax residency formally? The practical answer is that registering with the French tax authority, the DGFIP, and filing your first French tax return is effectively how you establish yourself in the system. You do this through impo.gov.fr, the French tax portal, and where you create an account and file online. You'll need your French address, your date of arrival in France, and details of your income. In your first year, you'll also need to declare the date from which you became French resident. If you've been in France for a year or more and haven't yet registered with the French tax authority, I would strongly encourage you to get that sorted sooner rather than later. Voluntary disclosure of a late start is treated far more favourably than being identified by the authorities. The DGFIP has been increasingly active in cross-referencing data with other EU countries and the UK since Brexit. They do find people eventually. For formal confirmation of your tax residency, for example, if you need to prove it to a UK bank or pension provider, you can request an attestation de résidence fiscale from the French tax authority. This is an official document confirming you are registered as a French tax resident and is generally accepted internationally. So, to summarise, French tax residency is determined by 4 tests: your home, your time spent, your professional activity, and your economic interests. You only need to meet one. For most British expats who have genuinely moved their life to France, residency is clear, but the year of arrival, frequent travel between countries, and property in both countries can all create complications worth understanding. Being French tax residents means declaring your worldwide income in France every year, declaring foreign bank accounts, and engaging with the French tax system properly. It's not as terrifying as it sounds once you have the right support, but ignoring it definitely is. If you're unsure of your own residency position, particularly if you have complex ties to both countries, I strongly recommend you get professional advice. Next week, I'm tackling the question everyone with a UK pension wants answered. What actually happens to it when you're a French resident? It's more nuanced than you'd expect, and there are some decisions that once made cannot be undone. So that's one you really don't want to miss. Subscribe if you haven't already, leave a comment with your questions, and I'll see you next Wednesday.